Hello again, this is Robert Schein, Managing Director and Partner at Blanke Schein Wealth Management. Today is Tuesday, the 17th of November of 2020. Today we're going to go through some headlines as to what's moving markets most. You know, there's different headlines out there. There's constant conversations about lockdown 2.0, and I'll address that in just a minute. But let's go down to the real reasons, what markets are paying attention to, what matters most as it relates to investment management going forward. Thanks for watching. Now, right out of the gate, I'm going to remind our viewers, if you're new to us, thanks for watching. We're growing our subscribership exponentially, so it's been wonderful. So I know the clients are out there. We hear all the positive feedback, and we know that you're liking and subscribing, and more importantly, sharing to friends and family. That's what this resource is for. And I'm glad that everyone out there has the opportunity to find this of value. So we appreciate that. We're going to continue our commitment to you, which is real-time, market-related information that might not make it to your headlines on a daily basis, or more importantly, what we're going to report as we've been reporting, what markets are paying attention to. There's a lot of noise out there on our daily news cycle, whether we get it through our social media feed or even tuning into the nightly news. So we're really making headways as it relates to, we provide the independent research. It's only as good as the research itself. There's no other agenda behind it. There's nothing to sell. If it's not quality, we're not going to come back. And if it's not right, for the most part, we're not going to pay attention to it here at Blanke Schein Wealth Management. Keep in mind, we look at all sources from investment strategies to technical strategies from time to time. I'm going to spend some time today talking about technical strategy, the overall economic environment, as well as policy research. I constantly bring that to the forefront because that really is meaningful and it impacts portfolios as we navigate the world around us. Now let's talk about the world around us. Two key significant things happened both Friday and yesterday on Monday. We haven't seen to the likes in a long time, and they were positive. They were bullish signals. Let me show you what I mean. As we look at the S&P 500, as we often do, and give us an indication or barometer of what equities, essentially the trend is going to be on a short and long term. If you look at the New York Stock Exchange, this was reported this morning in a research piece from Strategist, and they do a quality job for us. So we love following them because they're always giving us great quality advice here in terms of investment research to follow. They point out that both Friday and Monday had very interesting and unique bullish signals that are long-term bullish, which by that I mean they look at the breadth on the New York Stock Exchange. Was there a net buy or a net sell in terms of the indices? And so, and the shares that are traded. Well, on Friday we had a net 7-to-1 ratio on buys to sells. That's huge, right? Followed up with Monday, a continuation of 5-to-1. If you put that in perspective, if you put those 2 days back to back, which we just had from a trading day perspective, that is a long-term bullish indicator. In fact, yesterday we were flirting with Dow 30,000 as I reported. Do I believe we'll get there? I absolutely do believe. We just don't have the crystal ball to say the timeline and the timing of which, right? We can never predict that. That being said, the trend is our friend. This is a huge, strong bull signal. And it's underlying that there is more room to run on a go-forward basis for the equity markets. Now, that might be sort of crazy talk from what you see in the headlines and what you're reading on the newspapers on a daily basis. And more importantly, if the sentiment, right, of investors is 50-50 split, which right now it is. 50% think the markets are going to go down, 50% the market's going to go up. That's the best time. That's the best window of opportunity to be invested, simply because you don't have a full consensus. If everyone thinks one thing, whether it's the market's going to go down or the market's going to go up, and everyone's on sort of the same side of the trade, that's when you really want to be careful when the consensus view, because oftentimes consensus views often wrong. History has shown and proven that. So right now we have such a clear divide because there's so much negativity out there and swirling around, and we've got such a disjointed market from the real market to the real economy. Now, as I keep pointing and reporting out, pointing to the fact that we do need a coronavirus 2.0 and Congress needs to act, because the real economy, there's a lot of disconnect on the small businesses, unemployment assistance, so on and so forth. We've seen it in our own small communities. And now with the threat and the advent of the lockdown 2.0, one key distinction that we've been reading in our research and we're going to report to you is it's not going to be like the great lockdown 1.0. By that I mean, remember how we had the lockdown for several weeks and almost a couple of months at a time, depending upon where you were regionally, US, or even around the world? Well, really, that really translates into we can't control the virus, right? And retail activity suffers even greater. That retail activity that suffers as relates to this virus has also long-term negative implications that will yet to be actually played out there. And we also know that 99.9% there's a survivability rate of this virus right now. Now, that's not to say the virus isn't real. It isn't very serious and very deadly in some cases. But the science and the history behind us in the last 9 months, if you will, has proven that there are ways of doing this. Markets are seeing through all of this. So regardless of what you and I think, what medical community advises, what government policy actually does or doesn't do, what the market and the economy has proven is if we stay at home or if we go out, and remember, when you go out, that's when you're spreading the virus. That's ultimately what's happening. Either which way, the market is paying attention to the economy can still move forward on a go-forward basis. If you look at some of the retailers that are actually reporting earnings this last week and the week before, there is the evidence. So while we may have different regions of the U.S. economy go to the lockdown 2.0, and we may even have a new administration that goes to a mask mandate, all of that being said, commerce can be done in different facets, and the U.S. consumer will find a way to spend money. Trust me, that is 2/3 of the economy, and we have proven just that. Whether you're staying at home or moving around, U.S. consumer will spend money. So that's what the market is paying attention to. It's not a debate on whether science or how we're going to, or what policymakers and medical and all this other stuff. That's not what I'm reporting here. I want to be very clear here, right? But I'm also reporting what markets are paying attention to, and they're seeing through. And they're also pulling forward vaccine opportunities, as we just had reported this week and last week. So there's a lot of positive momentum. This bullish indicator we don't see very often, and when you do, it's kind of head scratching. You're like, wait a minute, what's going to happen here? So we're not predicting the future here, but we look at history as a guide, and history right now is setting up for a bullish setup on a go-forward basis in light of all the negative lockdown news. So thanks for watching right now. I gave us some technical strategy talk for you. I also talked about the lockdown 2.0. We'll see how this plays out. And then also the bullish signals that we just reported. So I'll come to you again tomorrow. And again, like and subscribe. So thanks for watching.